For years, Elon Musk's tweets about Dogecoin have blurred the lines between irony and intention. But as his ventures converge, from Tesla and SpaceX to the X app and Starlink, a clearer picture emerges. Musk may not be joking. He might be laying the groundwork for something far more ambitious, a regulated, Musk-backed digital currency embedded within a financial super app akin to China's WeChat. Is Dogecoin merely a Trojan horse? And could Musk's vision culminate in the most significant disruption to fiat currency systems since Bitcoin? Part 1. The X Factor, Building the Infrastructure. When Musk acquired Twitter and rebranded it to X, he wasn't just buying a social media platform, he was acquiring a potential financial distribution channel. His long-term vision, as publicly stated, is to transform X into an everything app modeled after the multifaceted Chinese platform WeChat, which combines messaging, payments, e-commerce, and digital identity into a single ecosystem. During 2023 and 2024, X Corp began methodically acquiring money transmitter licenses in multiple U.S. states, giving it the legal foundation to offer payment services and potentially manage user funds. These actions are not random. They are calculated steps aimed at circumventing the regulatory missteps that led to the downfall of earlier projects like Facebook's Diem, formerly Libra, which faced massive global backlash due to its premature launch. Musk's approach suggests that he is prioritizing regulatory compliance as a prerequisite to any major fintech move, a lesson clearly learned from the failures of other big tech efforts to disrupt the financial sector. Part 2. Dogecoin. Testing the waters or the real deal? While Tesla and SpaceX accept Dogecoin for specific payments, Musk has stopped short of formally announcing any plans to launch a proprietary digital currency. Still, his repeated endorsements of Doge, both on social media and through limited integrations into his businesses, fuel public speculation and frequent market rallies. However, Dogecoin's current form is unlikely to be the ultimate vehicle for Musk's ambitions. The cryptocurrency lacks the technical scalability, regulatory structure, and institutional governance needed to function as a true financial backbone for a global payment system. Instead, it's plausible that Musk views Dogecoin as a social and technical sandbox, a space to gauge consumer sentiment, test transaction mechanisms, and build brand alignment between crypto culture and his broader ecosystem. In essence, Dogecoin may be less of an endgame and more of a public beta for a future Musk-backed digital asset. Part 3. Technical and legal feasibility. Is it even possible? The road to launching a legally compliant, scalable digital currency in the U.S. is anything but straightforward. Significant technical and regulatory hurdles remain. From a technical standpoint, blockchain systems still struggle with scalability. For example, Bitcoin processes only around 7 transactions per second, while Ethereum can handle about 30. These pale in comparison to centralized systems like Visa, which can process up to 24,000 transactions per second. Furthermore, energy-intensive consensus mechanisms such as proof of work continue to draw criticism for their environmental impact. On the legal and economic front, any new financial instrument would need to navigate a fragmented regulatory landscape involving the SEC, the Federal Reserve, the Office of the Comptroller of the Currency, OCC, and even Congress. There are also macroeconomic concerns to consider. Some experts argue that privately issued digital currencies could destabilize the US dollar, trigger capital flight, or introduce new inflationary pressures. These risks make the regulatory vetting process even more rigorous, especially for a high-profile figure like Musk. Part 4. Governance and Trust. The problem with centralized crypto. One of the principal selling points of Bitcoin is its decentralized governance model. No single person, company, or government controls it. In contrast, a Musk-backed currency would be deeply integrated into a centralized ecosystem spanning X, Tesla, and potentially even Starlink. This centralization raises key governance concerns. First, there's the issue of transparency. Who would control the supply of the currency? What kind of auditing or reserve requirements would be in place? Second, user protection and accountability would become paramount. In the absence of decentralized consensus, users would need to place immense trust in Musk's corporate entities to operate with fairness, compliance, and security. Critics argue that this model runs the risk of creating a private financial monopoly where decisions about monetary policy, user data, and transaction arbitration are made by a single person or corporate board. Without robust oversight and international compliance standards, such a system could quickly fall into the category of shadow banking. Part 5, Precedents and Lessons: What History Tells Us. The idea of a private or corporate-backed digital currency is not new, and the history of such initiatives offers valuable lessons. Consider Facebook's Libra Diem project. It was one of the most ambitious stablecoin efforts ever proposed, but ultimately collapsed due to intense regulatory opposition from the US, EU, and other global bodies. Facebook's error was announcing a sweeping vision before securing regulatory backing, an approach Musk appears to be avoiding. On the other hand, China's digital yuan, ECNY, is still in the early stages of rollout, with controlled pilot programs but slow public adoption. Despite government backing, it shows that even state-sponsored currencies face hurdles in replacing cash and existing payment networks. Meanwhile, stablecoins like USDC and USDT have found niche success in crypto markets, largely because they maintain some transparency and integrate with existing DeFi platforms. However, they remain under continuous scrutiny from regulators. In this context, Musk seems to be treading carefully, building infrastructure and compliance before making any bold announcements. This pragmatic approach may improve his odds of success where others have failed. Part 6, Market Sentiment and Investor Reactions. Elon Musk's influence on digital assets is undeniable. Dogecoin has experienced multiple rallies solely based on Musk's tweets or public endorsements. Similarly, Bitcoin experienced a dramatic rise after Tesla's $1.5 billion investment, and an equally sharp decline following Musk's environmental critiques. These market swings reflect the power of Musk's personal brand, but also expose a deeper issue: volatility driven by personality rather than fundamentals. Institutional investors, while intrigued, remain wary. They recognize Musk's unique capabilities and vision, but they also understand that high-impact market moves based on a single individual's opinions are incompatible with long-term financial stability. Nevertheless, if Musk succeeds in creating a legal, scalable, and transparent digital currency, sentiment could shift dramatically. Markets may eventually reward the predictability of a regulated alternative to Bitcoin. Part 7, The Suspense: What if he gets the green light? Now imagine a scenario where Musk obtains all necessary regulatory clearances, licenses from state and federal agencies, backing from banking partners, and perhaps even support from major financial institutions. He could then launch a new digital asset that is fully legal and insured, embedded into a user-friendly app used by millions globally. Accepted by Tesla for cars, Starlink for satellite access, and X for services and tipping. In this case, Musk's digital currency could attract capital away from Bitcoin and other unregulated tokens, particularly from institutions that require legal clarity and regulatory protection. It could also serve as a settlement layer for remittances, e-commerce, and even AI-related microtransactions, a complete ecosystem that goes far beyond what current cryptocurrencies offer. Such a move could reshape global digital finance, particularly if it undercuts the role of the US dollar in certain niches like cross-border payments or remittances. Part 8, Opportunities and Risks. A balanced view. There are undeniable opportunities. A Musk-backed currency could offer legal protection, institutional trust, and practical integration into a suite of real-world services. It could accelerate innovation in payment systems and provide an alternative to both fiat inflation and the volatility of decentralized cryptocurrencies. However, the risks are equally significant. There are concerns around centralization, privacy, monopolistic behavior, and systemic risk. If not properly regulated, such a platform could pose a challenge to national monetary policies, especially if it begins competing with the dollar as a store of value or medium of exchange. In the absence of global regulatory coordination, Musk's system could also face geopolitical challenges, particularly in jurisdictions that are wary of U.S. tech influence. Conclusion: Between vision and reality, Elon Musk may never formally launch a new cryptocurrency. But every move he makes, acquiring payment licenses, promoting Dogecoin, enhancing the X app, points to a broader vision. He is building the infrastructure for a compliant, integrated financial platform that could rival not only Bitcoin, but the traditional financial system itself. Whether he follows through or not, the implications are already visible. His strategy represents a hybrid model, part regulated fintech, part crypto-native disruption. If successful, it could lead to the most significant transformation of monetary systems in the digital era.